In the crypto world, not all blockchains stand the test of time. However, Fantom has managed to assemble certain qualities that may give it the edge to survive and thrive in the highly competitive blockchain world. In today's episode, we will discuss what makes Fantom special and why you don't want to ignore this cryptocurrency. My name is Crypto Andy, and it's my privilege to discuss Fantom with you. That being said, what is covered in this episode is for educational purposes only and should not be considered financial advice. Fantom is a layer 1 permissionless open source smart contract platform with a proof of stake consensus mechanism called Lacasis. Fantom's smart chain is called Opera. Its mainnet version 0.1 was launched in December 2019. It supported Ethereum virtual machines and provided full smart contract support through Solidity. The Fantom's foundation builds for the Fantom network. It was founded by Michael Kong, who currently presides as CEO. A way to conceptualize the Fantom network is a parent network composed of individual child networks that host dApps of all shapes and sizes. Users can deploy their own networks instead of relying solely on Fantom's main consensus layer. Fantom's utility token is called FTM, and it powers the Fantom blockchain. It's used for staking, governance, payments, fees on the network. Now that we understand what Fantom is, let's discuss its tokenomics. As of January 28, 2023, Fantom's price is 46 cents. Fantom's market cap is $1,169,000,000 plus dollars. The circulating supply is $2,541,000,000. It has a total supply of $3,175,000,000 plus FTM token. The max supply is the same, meaning that all FTM tokens have been mined. Now, I will cover the launch and initial token distribution. There was a seed sale raised $1.6 million in February 2018. The tokens sold for 16.016 cents, and afterwards there were 2 private sales and 1 public sale. Private sale 1 raised $24.8 million in May 2018. The tokens sold for 0.031 cents. Private sale 2 raised $12.8 million in June of the same year, and the token sold for 0.035 cents. The public sale took place in June 2018 and raised $2.65 million. The token sale sold for 0.04 cents and in typical fashion gave the worst price to the public. The total amount raised from all of these funding rounds was $41.95 million. The initial supply breakdown, which included the total amount of FTM tokens, was allocated as follows. Pre-mine rewards and airdrops received 32.75%. Investors received 41.76%. And the founder/project participants received 25.49%. What all this means is that the FTM token is overwhelmingly owned by small hands, with only 1.6% sold at public sale. So Fantom is essentially an institutionally controlled cryptocurrency. This being the case, understanding the supply schedule, meaning the time at which insiders who hold FTM tokens unlock and are available for sale, is absolutely essential. The next release, according to CoinGecko, is on the 10th of February 2023, with the majority of the FTM token unlocked by the 31st of December 2023. All of the FTM token unlocked by the 29th of December 2025. With that understanding, let's look at the price action and total value locked. First, I will briefly cover the last bull run. From July 29th, 2021 to the 30th of October 2021, the FTM token rose 1700+% from 19 cents to $3.45. In the same time frame, BTC rose 140%, so FTM outperformed BTC. This is quite common as BTC is a more mature asset. However, Bitcoin is safer and more reliable than Fantom, and it's not controlled by as many small hands. After that run up in 2021, the price of FTM crashed hard, losing all of its gains. Clearly, the FTM token is a trade, not a long-term hold, which is true of most cryptocurrency. In recent weeks, starting the first few days of January, the stock market and crypto markets turned around for a bear term rally. And the price of FTM rose 169%, and it's basically still at that price now. The price of BTC and that time frame rose 48%. Whether or not it keeps going is yet to be seen, but I think the main move has already happened, or at least a good chunk of it, and taking profits is quite reasonable at this price level. There are resistance points for FTM from March 25th, 2021, right around at the price it's at currently. So if it did go higher, it would have to break those resistance points. One of the things I find appealing about Fantom is that it currently has a good amount of total value locked in its ecosystem. As you know, we're in a bird market for crypto, and it's still up there with the top dogs. The current total value locked, according to DeFi Llama, is $513 million plus. The top project listed in its ecosystem includes Spooky Swap, a DEX, Geist Finance, a lending platform, and Beethoven X, another DEX. It is typical to see DEXs at the top of the list of total value locked within FTM's ecosystem for the simple reason that they are very liquid and need large capitalizations to operate. It's safe to say that FTM is a big, robust ecosystem and that it still has a lot of growth potential. Now that we have covered its price action and total value locked, let's take a look at its technology, which is also very critical for its long-term success. As previously mentioned, Lachesis is the consensus mechanism of Fantom. Lachesis is designed to plug into applications written in many programming languages. This allows developers to focus on building application logic for dApps. Lachesis is a DAG-based ABFT consensus algorithm offering improvements on classical proof-of-stake consensus mechanism. Also, Fantom operates on the Opera chain. Fantom's Opera chain consists of 3 layers: the core layer that processes transactions at scale, the Opera Ware layer, which supports smart contracts and other functionalities, and the Opera application layer, which provides support for third-party applications. Theoretically, the Opera chain layer can process up to 300,000 transactions per second. This is much faster than Ethereum. Additionally, the initial language Fantom was written in is called Scala, a well-known programming language. Scala can perform the same work as Java using smaller coding lines. If you have ever had the experience of working with Java, you know it's not fun to use. Thanks to Scala, the coding is reduced and testing and distribution becomes faster. There is also a Fantom virtual machine. The FVM uses a register-based model. What that means is that the code can be optimized to make only a single calculation and store values to the register for reuse, increasing execution speed. In other models like the Ethereum stack model, it's not possible to shorten code, and it's the reason why it takes so long. That makes the Ethereum virtual machine less efficient. There are also Fantom wallets, which can be connected to an existing MetaMask wallet. The option currently stated on foundation.fantom includes MetaMask, Wallet Connect, Coinbase, Ledger, and there is a software option. If you want to look through the wallets, you can go to the ftmscan.com and look at things like top accounts with the highest balances of FTM token, validators, leaderboards, and most useful chart statistics. You can look at fundamentals of the network, like network pending transactions, network transaction fees, verified contacts charts, and transactions from the FTM senders. At this point, I would like to briefly discuss Michael Kong's background in the blockchain industry. Michael Kong is a blockchain expert and CEO of Fantom. He has a bachelor's of computer science from the University of Berkeley, California. He also has a master's of computer science from Stanford University. Michael has also done executive education programs at Harvard Business School. According to Metaschool.so, Michael Kong's career began as the Chief Operating Officer of BitPay, a payment platform. He was also the CEO of BitShares, a blockchain-based payment platform. He was the CEO of Shapeshift, a digital asset exchange. Michael has also been a part of several successful projects, including the launch of the first Bitcoin ATM in the USA. He also had a hand in the development of Ethereum. Needless to say, he's a very well-educated man with lots of relevant experience in the blockchain industry, serving at the highest levels of the corporate ladder. All of that experience does help explain why Fantom is a successful project, even during a bear market. To get an idea of the direction that Fantom is taking, I will summarize questions answered by the Fantom top brass. Based on the Quantum Miami conference, I found the following comments from Michael Kong and other Fantom executives. The presenter mentions Fantom is focusing on the baseline security instead of using horizontal scalability solutions like Arbitrum, which I made a video of. Click on the description above to see that video, or Matic, which I also made a video on. Michael Kong answered this question. We don't want to compromise security to gain performance because that is not acceptable to us. Much of the development has been on the core consensus mechanism. You can process multiple blocks that contain transactions simultaneously in the network. It is asynchronous. So the emphasis for now is on the core technology of Fantom. The presenter then asked that Fantom is taking a longer, more sustainable approach to adoption by giving developers the right tooling needed and the right financial support. Can you expand upon that? The question was answered by Juan Angel, the head of marketing. The Fantom team will seek to remove themselves from the ecosystem vault as much as possible to allow market participants to decide how to leverage technology to their own use cases. The economic vault is a community chest that funds projects by taking a percentage of network fees generated by Fantom. What Juan is saying here is that they want to decentralize decisions for the community. A 55% approval greenlights the use of funds for projects. This highlights the financial support that the presenter asked about and how Fantom wants to decentralize funding decisions and leave them up to the participants. Also during the panel, the question of security came up. Simone Pumposi, the CMO, stated that Fantom business developers at the infrastructure level have tools to keep them safe which offer best layer security, those being Watchdog and contract libraries. Those tools can scan smart contracts and look for potential vulnerabilities so developers can be notified and fix them. Also, the single opera chain that Fantom uses makes it so you don't have to sacrifice security, performance, or user experience. It keeps things simple and straightforward for the entire ecosystem and for developers. It seems to me that the executive team is making the right moves to grow the Fantom ecosystem for the long term. They are not so much interested in speed, but quality, and this should serve them well. It could mean that Fantom has more staying power due to this long-term outlook. I will mention that the choices that they are making are not unique. You see choices like this by projects like Cardano. That being said, Fantom definitely is a strong challenger in the layer 1 space for blockchains, and I will not ignore them and will be keeping an eye on their growth. It definitely has all the signs of a project that might be worth investing in. The long-term view, the focus on core technologies, the focus on security and longevity. These are all attractive qualities, but they don't mean that they will dominate the L1 sector because the competition is fierce. However, it does mean that Fantom will outsurvive projects with smaller outlooks. If you have made it to the end, I want to thank you for your time. Thanks for watching. Don't forget to like the video and subscribe to the channel. Feel free to let me know what information you want to cover in the next video. Have a good rest of your day. Goodbye, my friends.